Good evening, all the Chinese. Hi, this is Prajakta. I would like to warmly welcome you all on behalf of NGEN Research. So meanwhile others join, what we will really do is introduce our topic for today. So our topic for today will predominantly revolve around analyzing a performance of mutual fund schemes vis-a-vis each other. So for that, we'll definitely first understand how we can load a specific category mutual funds um, in the compare section for performing further analysis. Once we are through with understanding how we can load all the schemes from a specific category, we'll then move ahead and understand how we can compare each of these schemes with each other, and of course with a category average and a relevant benchmark. Once that is done, we will then move over to understand the drawdowns and the recovery analysis. The drawdowns analysis will typically help you in understanding what is the strength of a fund to recover from a loss. And this will definitely speak a lot about the resilience of a fund to recover from the losses that are going on. On the other hand, we'll then move ahead on the rolling returns analysis. Rolling returns analysis will specifically help us understanding how is the consistency of the returns of these specific schemes. And then we'll move over to understand the monthly SIP analysis and the lump sum investment analysis. After that, we'll understand how we can do a point-to-point analysis wherein you can check the absolute on an absolute level as well as on an annualized level, what has been the performance of these schemes. Lastly, we'll definitely move ahead with the correlation analysis and then have a look at the position overlaps as well. Lastly, we'll definitely throw the forum open for a Q&A session wherein you can ask your questions either in the chat box or you can directly unmute yourself to speak. So let us now begin. So let me now proceed on the NGEN Markets terminal. This right here is our terminal. Once we land here, for the purpose of our webinar, we'll directly head over to the fund section. In the fund section, we can see the entire screener of all the mutual funds that are currently trading on Indian equity markets are listed right here. They are categorized on the basis of categories. So first of all, in order to filter a category, you will have to click on the screener and filter categories. When you click on filter categories, 4 buckets open up. So before, there used to be 5 buckets wherein we had solution oriented and others specifically different. So now what we have really done is we have included the ETFs and the equity index funds into equity bucket, and respectively for debt we have considered ETFs debt and debt index funds into debt as a category. Once we're through with that, we'll now go ahead. Yeah, okay, so there's a message in the chat box to go a little slower. Fine. I will try and go a little slower. So in the funds section, which is our fourth section on the terminal, when you go to the funds section, click on filter categories. Filter categories is specifically a section which will help you in actually screening some categories and funds from it. So for that, just click on filter categories. When you click on this, you will see that there are 4 different buckets. So first one is equity bucket, wherein you will see all the subcategories of equity asset class listed right here. Second is the debt. Third is hybrid. So you will typically have all the balanced advantage, dynamic asset allocation, multi-asset allocation funds listed in the hybrid bucket. And the last one is the others. So this is specifically as per the SEBI classification of it. The only tweak is that we have considered now ETFs equity into equity bucket and equity index funds into equity bucket. Similarly, for debt, what we have done is ETF debt, which used to be previously getting classified as others, we have now reclassified them into a debt category. So they can be listed right here. So debt index funds and debt ETFs can be available in the debt bucket. And now for the purpose of our webinar, we are going to have a look at the performance comparison of all the large cap funds. So for that, I will just choose large cap funds. And then for choosing that, I'll just tick on this and I will see that there's one active selection, meaning we have chosen only large cap funds. Once this is through, you click on close button, which is appearing right here. So once you click on close, you will see all the large cap funds appearing here on your screen in front of you. All of these are listed right here. You can definitely arrange them or sort them as per their ascending and descending order. So if you just click on scheme names, it will get sorted in ascending and descending order accordingly. Now, before going ahead, if you want to apply some filter parameters to actually restrict our search to some specific mutual funds which meet certain criteria, how will you apply filter parameters? So for that, we have given you some filter parameters right here. So first of all, let's consider only those funds who have at least a minimum reporting history of 5 years. So by ensuring this, that we put a minimum age is 5 years, we exclude very, very young funds from our search. So that's the reason I've put in a minimum age criteria as 5. Once this is done, every time you apply a filter parameter, you click on apply. Only then will the search be effective or the filter be effective. So now I have put in 5 as a minimum age and I clicked on apply. Now, how will you check if this has gotten sorted or not? For that, directly head over to the last column, which is right here, age in years. Just sort this in ascending and descending order, and you can see that the minimum age starts from 6.16. So practically, we have excluded all the funds which are less than 5 years old or up to 5 years old from this specific list. So we have only those funds who are 5 years and above. Now going ahead, let me apply some more filter parameters now with respect to returns. So for returns, we have a minimum return parameter, which is right here. So for an example case, what I'm considering is I would like to have only those funds in my selection who have at least given a minimum 3-year annualized return as let's say a 15%. So 3-year annualized return as 15%. Mind you, this is not cumulative return. This is not absolute return. This is annualized return. And where do you find this? There's a clear cut information about this written right here. So whatever returns that you can see, which is above 1 year frequency, are always shown annualized. So that is a clear disclaimer that we have put in right here at the top. So when we put in a parameter as minimum 3-year returns as 15%, these are the annualized returns that we are speaking about and not absolute returns. So when we put this as a filter parameter, then we again click on apply. And again, some funds from this list will be deleted based upon this criteria. Again, how we can verify that? Just use the scroller, and because this was a 3-year parameter, just locate 3 years as a column heading, which is right here. When you locate the 3-year period, just sort it on the basis of ascending and descending order, and you can see that now the minimum return, 3-year return, is 16.49 for all of the funds that we have in the universe. So of course, it starts from Axis Blue Chip and it goes up to Nippon India Large Cap, which had the highest 3-year return, which is 29.19%. So this is how you apply filter parameters and delete some funds from your screening which do not meet your specific filter criteria. Once this is done, we will then take all of these funds to the compare section so that we can do a further analysis of it. So typically the funds section on NGEN Markets is useful for screening mutual funds, and all the research and analytics and all the research part of it specifically, or elimination of it, or understanding the risk versus return parameter, the scatter plots, all of that happens only in the compare section. So we have to take them in the compare section for further analysis. So how do we take that in the compare section? One option is definitely go ahead and pick and choose only 5 or 6 funds that you would like to have in the compare section. That can be done by clicking on this add to compare button right alongside the name of the scheme. For that, just click on it. They will just get added one by one in the compare section. So as you can see, currently I've added Nippon India Large Cap. I've added a HDFC Top 100 fund. I just click on the compare button right alongside it and it will get added. I click on ICICI Prudential Blue Chip Fund, it will get added in the compare section. So that is one option of adding all of these funds in the compare section. Another option is directly take all of these funds up to 50. Of course, here we are showing up to top 50 funds. So up to 50, if there are any funds in this particular fund section, automatically in a single click, they will get added in the compare section. So for that, just click on this add top 50 to compare. When you click on this, all the 25 funds that we had in the fund section have now gotten added in the compare section. So that's definitely an efficient way of doing that instead of manually adding them one by one. So that's right here. All the 25 funds are now in the compare section. Once they are in the compare section, we will then like to specify some start date so that we do a fair apples to apples analysis for all of these funds, because all of these funds have a different inception date. Understanding or doing an inception onwards analysis will be not exactly a fair analysis, because some of the funds are very very old, and the others are pretty young. So pretty young, by that I mean more than 5 years old. So for that, what we will do is we'll specify a common start date wherein we will do this analysis from. So for that, all you need to do is there's a return columns icon right here. So you need to click on the settings icon right beside the returns column. When you click on this, a small window will open up, which will let you put in a customized start date. Just click on that and put in a customized start date. So let's do this analysis for the last 5 years. So just choose it as 2018. Of course, you can pick and choose your own date of your choice, but let me just take it as let's say 2nd of July 2018. And after that, I click on go. Once I click on go, I will see a exclamation, red color exclamation mark right here, which will tell me that look, you have chosen a custom start date and this is not from inception. So this is a highlight. I mean, this is something that we are prompting you all to see. So so that you exactly know what analysis you're doing from. So if you click on this, the date starts from 2nd of July 2018. Once this is through, then you can see this cumulative returns column. This cumulative return columns, conversely to what we saw in the funds section. In the funds section, everywhere, wherever you could see the column headings as more than 1 year, all of that is annualized. On the other hand, if you want to see the cumulative return of all of these funds over a period of your choice, then you need to go to the compare section and focus on this cumulative return column. So from whatever start date that we have chosen, which we have currently chosen as 2nd of July 2018, from 2nd of July 2018 till we are on 6th of July 2023, we can see that the cumulative returns of all of these funds are so on and so forth. So we can see that topper in this list is Nippon India Large Cap Fund, which has had a cumulative 5-year return of close to 100%, so 99.63. On the other hand, Taurus Large Cap Equity Fund has recorded the lowest cumulative return to an extent of 58.21%. Mind you, these are absolute returns and not annualized. That is specifically what we mean by cumulative return. Now, if you were to understand what are the CAGR, or for an example, what are let's say an year-to-date return of all of these mutual funds. So year-to-date typically means from the start of the year, calendar year start of the year, so January onwards, January 23 onwards to July of 2023. So for that, directly go ahead to year-to-date column and then just sort this on the basis of their returns. So we can see that again, Nippon India Large Cap Fund has managed to generate a highest YTD return of 13.45%. On the other hand, Taurus again is the lowest performer here. Now, in order to do a comparison of these mutual funds, because all of these are large cap funds, we would like to compare this against a relevant or a respective benchmark. For all the large cap funds, we can either take a Nifty 50 or for that matter Sensex, or even Nifty 500 if you want to just broaden your benchmark, broaden your index. So let us consider a Nifty 500 and add it as a row item here, right here in the main list, and see which of these funds have actually managed to outperform the benchmark and which of these have not managed to outperform the benchmark. How do you do that? You directly head over to add other items and search indices. Here, just type in Nifty 50. Or for that matter, whichever index that you want. Let's consider Nifty 100 in this case. We just put locate Nifty 100 and click on it. It will get added as a row item right here. So you can see the category column here says large cap funds, and right here in the middle is Nifty 100. Now let us just sort them on the basis of CAGR returns and see which of the funds lie above Nifty 50 and which of the ones that lie below it. So for that, I'll just sort this on the basis of descending order. So highest to lowest. My index is right here. So everything that is above this specific row item, that is above this row, all of the funds that have gotten populated above this row have actually managed to beat even Nifty 100 as a benchmark on the basis of with respect to CAGR as a parameter. All the funds that are below this specific row item, for an example, HSBC, Bandhan, GM Large Cap Fund, Axis Blue Chip Fund, all of these funds have actually underperformed and have not been able to even beat Nifty 100 as a benchmark, of course, from the time period that we have chosen, considering CAGR under consideration. Now let us go ahead and see how these funds perform with respect to the risk-adjusted return as a parameter. So for risk-adjusted returns, what do we mean by risk-adjusted returns? Is we are trying to understand which of the funds give more return per unit of risk that they take. So that typically is what given by the Sharpe ratio as a parameter. Sharpe ratio appears right here. You just have to click on it, and you will see that with considering Sharpe ratio as a parameter, the benchmark Sharpe ratio is right here. So the benchmark Sharpe ratio is 0.31, of course, from July of 2018, which is our start date. And all of the funds that appear at the top above this index, all of these have managed to generate a better Sharpe ratio than even the benchmark. And specifically these two funds, which is Axis Blue Chip and LIC MF Large Cap Fund, these two have not managed to beat the benchmark with respect to Sharpe ratio under consideration. Once this is through, let us now move a little ahead and perform a rolling analysis of all of these funds. So this is a fairly large universe. What we can actually do is try to eliminate some of the large cap funds from this universe and then try to load a smaller list for performing a rolling analysis, so that all of these funds fit into one single screen, so that understanding rolling analysis is a little better. So for that, what I will do is I'll load in a pre-saved large caps list. So I have this saved right here. Let me just locate that. So what you can do is, if you want to reload or load a list that you have already saved, you just need to go to my lists and locate your lists. So I have saved it as a large cap list. So I'll just locate it from here. Just find your list. It's right here. So once you get it, just load it, and all of the funds from that list will get loaded in the compare section. Once it is there, again, because we are doing analysis with respect to a benchmark, we will add in a benchmark right here. Let's now consider a Nifty 50 and add it as a row item. So now we have 8 mutual funds and we have 1 index. So total 9 items. Now let's move ahead to rolling analysis. Once we go to rolling analysis, just click on rolling window, and we can see that some parameters appear right here. So let us understand these parameters one by one. So firstly, a rolling window. So what rolling window signifies is what is the holding period or the period for which you want to roll these returns. Of course, the default, they load on the frequency of daily rolling only, but this is just a holding period. So what do you want as a start date for doing the rolling analysis? So for that, the rolling window currently is taken as 260 days, which is equivalent to 1 year working days. So in this case, which is clearly signified as a 260 days as a rolling window. Next, let us do this analysis. Let's go a little consistent and do this analysis for the last 5 years only. So from the start date, I will just choose for 2nd of July 2018, which was the day that we initially did the analysis for. So let me just do that. So 2nd of July 2018 to 6th of July 2023. Once these parameters are set, you can just click on run. And when you click on run, all of these the data for all of these funds get appeared right here. So what we can see is, first row is the average returns. So what are the average 260-day holding period rolling return that were generated by all of these funds? So if you just click on this, we can see that Kotak Blue Chip as a fund had the highest average returns in the last 5 years, considering 260-day as a rolling window. On the other hand, the lowest was by DSP Top 100 Equity Fund. Now let us move ahead and understand the volatility. So volatility as a parameter tells you as to what is the level of risk, or what is the level of the standard deviation of these funds from their average returns. So how volatile are the funds? For that, just click on volatility as a parameter, and we can see that HDFC Top 100 Fund had the highest volatility of 23.87%, of course, in the start date that we have chosen, and the lowest was in Axis Blue Chip Fund. Next, what we have is the high and the low columns. So high and low, nothing but says that in this specific time period, HDFC top 100 reported highest returns of 89.48%. So how do we verify this, or how do we corroborate with this? For that, we'll just locate this neon green color in this chart, and we can see that it is right here. So if we just point towards the highest point that this green fund has ever gone, we will definitely be able to locate it right here. So for that, just find the green column. It would be, of course, it is overlapping here, so we'll have to just find it here in the at the top, and this right here would be the peak that this fund has ever reached, which will exactly be 89.48%. So that is exactly what we mean by the highest that this fund has ever gone. The lowest, however, of course, conversely, is what are the lowest or the worst return that this fund has really generated in this time period under consideration. So we can just locate it right here. So I can see it's right there. So negative 38.03. So that means if an investor would have invested in last 260 days, which is, I mean, 23rd March 2020, and before that 260 days, so he would have been the unluckiest of the lot to record a lowest return of negative 38.03%. So that's the lowest that this fund has ever given. And of course, the next part is the range. Range definitely tells you what is the absolute difference between high and low. So higher the range, higher is the volatility of the fund. So higher is the variation of it, basically. So it is nothing but a modular difference, ignoring the signs. So 89 minus 38, that is 127%. That's why the range of it. So it can go as high as 89, it can go as low as 38. So that therefore the range is 127.51%. And lastly, the positive percentage column. This tells you that as to how much of the times this fund has given returns which are above 0%. So that means typically positive returns. That's why we have a column heading as a positive return. And we can see that if we sort this on the basis of positive returns, we can see ICICI Prudential Blue Chip Fund has managed to generate returns in the positive quadrant, that is above 0, maximum number of times in 1 year, in 260-day time period, of course, from the start and end date, that is right here. So we can definitely check the positive returns criteria right here. Now, as we increase the holding period, we will now see how the lowest that these funds have ever gone changes substantially. So currently the rolling window is 260. If we just edit this to include, let's say, a 3-year rolling window, which will be definitely given by 780 days. Why do I take 780? Is because 260 is equivalent to 1 year. So 260 into 3 is 780. So I just put 780 and I click on run. When I do that, I can starkingly see the difference. So when the holding period was 1 year, that's 260 days rolling window, the lowest that this funds had ever gone was always a negative. On the other hand, as the holding period increases to a 780-day period, that is a 3-year period, we can see that even the lowest that these funds have ever generated, all of it in this case is positive, which is again corroborated right here. Positive percentage is 100 for each and every fund. So that means each and every fund of this in this list that we have has actually generated returns which are above 0%. So that typically means all of these have generated positive returns. That's why the lower returns is also positive. Now let us go scroll a little down and have understanding as to what do we understand by the rolling returns distribution. Rolling returns distribution tells you in a given range that is right here. So for an example, the default ranges, as you could see, we did not put in any return ranges manually, right? All of this got auto captured. So why did this get auto captured? Let's just focus on the lowest that this category ever has recorded. So in this case, the lowest is DSP Top 100 Equity Fund, which is a lowest return of 5.68% positive. That's the reason this range starts from 5.68% positive. And the highest that this category has ever recorded is what? Just sort this, and you can see that HDFC Top 100 Fund has reported a highest return of 45.63%. And that's the reason the uppermost range in this uppermost class interval ends at 45.63%. Now, suppose a client comes to you and says that, look, my target return range is between 10% to, let's say, 25%. And I want you to tell me as to which all of these funds generate returns in that specific return range, which which is my target return range. So how do I tell that to the client? For that, in any of these 5 buckets, so we have 5 buckets, in any of these 5 buckets, just put in this range of the client. So basically the target range. So what I'm doing is predominantly putting 10% here, and from 10% to 25% is what I want to check. So I just put in the range here, 10% to 25%, and I can see that these funds have generated returns between 10 to 25% in these probabilities. So I can see that specifically Access Blue Chip Fund, it has generated returns in 10 to 25% maximum number of times, which is 83%. So 83% of the times this fund generates return in the client's target return range. On the other hand, let's say for an example, HDFC Top 100, it generates return in this target return range only 78% of the times. So that is something that you can, this analysis is something that you can definitely highlight. So that's the rolling returns analysis. I hope this is clear. Let us now move ahead to understand the drawdowns analysis. For drawdowns analysis, you directly have to click on the drawdowns tab, which is the next tab just after the rolling analysis. Once we land in the drawdowns tab, what we understand here is we have actually ranked all the losses that have ever been recorded by these funds, of course, historically, from a start date that can be put in right here. So again, let's be consistent and let's just choose a date. Let's keep it consistent as July of 2018. So let me just put in that specific date. Once this is done, what it will really do is it will rank 5 worst drawdowns. So they are ranked on the basis of their magnitudes. So if you see, this is the worst drawdown. That is, for example, in case of DSP Top 100, 40% is the worst drawdown. Second worst, it will always be a lesser magnitude than the first one. So it's 19%. The third again will be lesser magnitude than the second, and of course, so on and so forth for fourth and fifth. Now, what we can make out from this is how much days does the fund take to recover from a particular loss. So, whichever fund you choose, how much ever well does it have a history of, but in specific volatile times, it will definitely, not be resilient to losses. It will definitely make losses. But what is really pertinent to note is how quickly does it recover from one particular loss. So for an example, let's consider an example of a Kotak Blue Chip for that matter. So in this case, just click on this chart icon and this will open in a new window. So what this says is the worst drawdown of 37.06% happened in this fund when the NAV of the fund fell from 257 rupees to 162 rupees. That's specifically a downfall of 37%. So to fall from 257 to 162, the fund specifically took 59 days. Right, so 59 days are exactly pointed out here. So 24th of Jan 2020 to 23rd of March 2020. That's exactly 59 working days. And in these 59 days, it fell 37%. And after falling so much, the fund took 164 days to recover this entire loss and then again start going on the growth trajectory. So this is exactly what recovery rate tells you. So after falling to 162, the fund took 164 days and to recover this entire loss. And on 6th of November 2020, which can be located somewhere here. So let's just locate it in the form of a line chart as well. So 6th of November 2020. Okay, so right here. So we can see that the NAV has already crossed 257.75, which was the start price when the drawdown started happening. And that is exactly the reason why we have mentioned that as a recovery date, because it crossed, it broke that limit and it went past it. So that's the reason, that is the date of recovery. And the NAV, as you can see, has breached that limit. It is now at 263.73 as of 9th of November 2020. So this is exactly what this line chart tells you. So the gray periods right here signify the loss periods. So there's a steep loss of 37%, which is right here between January and March. So this is mentioned right here. So there's a steep fall. And after that, the white portion of this signifies the recovery. So that typically tells you what was the recovery of this fund. Of course, this same logic applies for even the second worst drawdown, which is of a magnitude of 18%. The start price NAV was 396. The date, of course, was 18th of October 2021, which is specifically highlighted by this particular gray area, wherein the loss was of 18%. Now, this was an individual fund drawdowns analysis. Now, if you want to do a comparative drawdowns analysis, what you can do is just sort this on the basis of size. So because we have an index here as well, what we can interpret from this is there was a loss of a size of 41% in HDFC and DSP, which was larger than even the Nifty 50 drawdown, okay, of the same of similar period, which was the worst drawdown of all of these. All of the other funds, however, managed to generate a drawdown of a lesser size as compared to the benchmark, which is Nifty 50 in this case. However, in this case of HDFC Top 100, it took 263 days to fall 41%. But after that, the fund took 190 days to recover this entire loss. Now, if you were to sort this on the basis of quickest recovery, so we can see that the index is right there, ranking second. The only better performer is Kotak Blue Chip Fund, which seems to be more resilient while recovering from a loss, right? It recovers the quickest from the loss of its worst loss, which is at 164 working days. On the other hand, all the other funds take longer than even the benchmark to recover from its worst drawdown. So this is what the drawdowns analysis will help you in understanding. It will definitely tell you leaps and bounds about the strength of a fund to recover from a loss, and therefore really calm the client down or the investor down in specifically jittery times when the clients really want to know, should they be liquidating their positions or should they be holding on a little longer. So this is something that you can definitely use, the drawdowns analysis. Next, moving ahead to the monthly SIP and a lump sum analysis. For that, let's move over to the monthly SIP tab. When you go to monthly SIP tab, what we have given is installment amount, which is a notional installment amount that you can put. So for an example, let's consider a 10,000 rupees as an installment amount. The only use of this installment amount is for calculation of this final value. Other than that, the XIRR, of course, depends upon the returns that these funds generate. So depending upon the installment amount, and of course, from the start and end date that is here. So let's just do this analysis for the same 5-year period, and we'll take it the 2nd of July and 6th of July as the end date, and we can run SIP. So what we can see is the final. If we sort this on the basis of final value, we can see that SBI Blue Chip Fund had the best final value of a 9,29,106 rupees with an XIRR of 17.02%, which was the best among the lot. On the other hand, where does the index stand? Index stands somewhere here. So index XIRR is 15.09%. On the other hand, all of the funds that lie above it, of course, this is ascending order. So all of the ones that lie below it have actually not able to beat the benchmark with respect to monthly SIP as a when XIRR is taken into consideration. Now, if you want to do a detailed SIP analysis and take reports out of it, we definitely have that functionality right here. All you need to do is just click on the small piggy bank button that you can see right at the alongside this particular final value. When you click on this, it will get open in a new tab, whichever fund you click on it. And of course, you can load a new fund here as well. So what we can do is HDFC Top 100 fund individual SIP analysis. What more information is available here is the invested value also comes in. So 10,000 per month for a 5-year period. How much that amounts to? That amounts to 6,10,000. That's the invested value. And after that, the final value is 9,28,000, which is of course matching with what we have here. So that's exactly what is available here. And we also have provided a PDF download option here. So when you click on this PDF download option, there's a detailed 2-pager PDF that gets downloaded, wherein you can specifically see the monthly, month-on-month breakup of the NAVs as and when the installments started coming in. How did the NAV change? How many units were really acquired? And of course, what was the final value as and when the units started accumulating? This is the detailed SIP report that gets downloaded. Of course, all of this is going to be co-branded. You can definitely share that with your clients. That's about an individual SIP report. Once this is done, let's now move ahead to a lump sum analysis. Let's say now you want to do, let's say what you want to understand how a lump sum investment in these funds would behave. For that, directly head over to point-to-point analysis, which is the third last tab in the compare section. When you go to the point-to-point analysis, you can actually put in some specific scenarios as start and end dates. So for an example, let's consider let's say a union budget scenario. So for that, I have put in a start date as 25th of January 2023, end date as 10th of February 2023. So within 2 weeks, how did these funds perform, or what were the returns? So of course, please note that because this period is less than a year, you always need to choose absolute. Only then it will be accurate returns, because if you choose annualized, all of this will be converted into annualized percentage. If the period that you're doing this analysis for is less than a year, you need to ensure that you choose absolute, and then only then in that case exact point to point returns will definitely be shown. So in this case you can definitely sort this, and you can see that index in this case gave in negative 0.20 returns. On the other hand, apart from ICICI blue chip, all the other funds given, of course, a nominal but a positive return within just 2 weeks, right? So this analysis is something that you can do. In addition to that, what you can also do is a scenario based analysis. So for an example, let me just show you the scenario analysis that we have, and let me show how you can replicate that for a list of funds right here. So we definitely have scenario analysis on an individual fund level. So let's say for an example, I will load ICICI Prudential Blue Chip Fund in a new tab. When I load this, I just click on it, it will get loaded in a new tab. I just directly head over to scenarios analysis directly, and I just take a scenario of Axis front running that was that really came up right in 2022. So in this specific scenario, what we can actually see is how did the fund perform, which is indicated by the blue line over here, vis-a-vis the benchmark, which is indicated by the black line, which is Nifty 100 in this case. And the start date, of course, is 2nd of May 2022, and the end date is 31st of October 2022. In this specific time period of 6 odd months, the fund actually managed to beat the benchmark returns by a 4%. So benchmark given 4.73%. On the other hand, the fund given 8.44%. So of course, this is a fund from large cap as a category. And then let's see how Axis as a fund, Axis AMC fund, a large cap fund, behaved in the same scenario. For that, one way, of course, is again go back to NGEN Markets, just load in Axis in a new tab, and we can see how did that fund perform in that specific scenario. So once you've added in that scenario, that will definitely stay with you. So it's right here. We can clearly see that in this particular scenario, there's a clear underperformance by this fund, which of course is from the Axis AMC vis-a-vis the benchmark. Of course, the benchmark is again the same. The fund is again from the large cap as a category, but still there's a clear underperformance. So the benchmark return was 4.73, which is of course consistent with what was there last time. But in this case, the fund's performance is 3.68%, which is a negative. I mean, there's no excess return. Actually, it's a negative return as compared to the benchmark. So it's a lesser return. So now, if you want to compare this for a set of funds that you have added in the main list, all you need to do is just make note of this period. So the period is 2nd of May 2022 to 31st of October 2022. All you need to do is go to point analysis and just put in that specific time period here in any of this bucket that we have provided. So I've put it here, right here in the first bucket itself. So what I've put in here is 2nd of May 22 to 31st of October 22, which is actually a scenario for Axis front running case. Then I directly click on lump sum investment value. Right, and this is exactly where you can put in a value. So let's assume let's say 1 lakh rupees was invested, right, in this specific time period, how that would behave. So I just click on sort, and I can see that the top performer was a DSP top 100 fund, which gave in 1,10,067. On the other hand, ICICI, as we saw, was 1,08,443, which is again still better than the benchmark, which is right here. On the other hand, the lowest performer was Axis Blue Chip, which gave in definitely more than 1 lakh, but the least among this entire funds that were under consideration, which is appearing right here. We have just sorted this in the manner of ascending order, so lowest to highest. So 1,03,000 was the returns by Axis Blue Chip Fund. On the other hand, the benchmark, which is of course in this case Nifty 50, is at 1,05,525. You could definitely choose in a Nifty 100 here. It's just that you add it right here, and then you can see how that would have performed. Let me show that to you as well. So you just need to add it as a benchmark, as a row item, and then head over to point, and you can definitely see it for the same here as well. So you can see the Nifty 100 was 1,04,730, which is 4% return. And in this case, Axis is the least. So that's how you can do a lump sum investment analysis as well. Now let's finally move over to the correlation analysis. Of course, in this case, because we have all of the large cap funds loaded, we will typically see that the correlations is very, very high, right? If you just click on this, you will typically see the entire lot is from same category, which is a large cap. That's why you can see all of these have very high correlations with each other. So for an example, a Mirai Asset, a large cap fund, has a correlation of 0.97 with a HDFC top 100. So let me interpret this for you, and then let me also load in a portfolio and show how we can check correlation analysis of the portfolio per se. So what this means is what is the price momentum and what is how the coordinated moments will be of two funds under consideration. So this is for a pair of funds. In this case, we've taken into consideration Mirai Asset Large Cap Fund with the HDFC Top 100 Fund, and we can see that the correlation is 0.97. So that means if Mirai Asset Large Cap Fund is going up, 97% of the time HDFC Top 100 Fund is also going up. So this is actually the NAV movements, how coordinated they will be. Right. So now this is what correlation analysis means. Of course, a highlight in NGEN Markets is we calculate correlation analysis not for a time period, but on a daily NAV movement. So as the daily NAV gets updated of these funds, we calculate correlations on a daily basis. So that's what is the highlight of NGEN Markets correlation analysis. Now let me load in a portfolio and let me show how you can check correlation analysis with respect to a portfolio. So for adding a portfolio, directly head over to add portfolios and securities, which is right here in the compare section, and just search for a portfolio. So let me, for an example, just take test portfolio 1. And once I load this, I have a diverse set of funds. As you can see, there are close to 13 odd funds and across categories. So from hybrid, there are some large and mid caps as well. There are some dynamic banking and PSU debt funds as well. So directly then head over to correlation analysis. And what we can clearly make out is a flexi cap fund, which is from equity bucket, Parag Parikh flexi cap, has a negative correlation with HDFC arbitrage fund, which is typically from a debt category. So that clearly makes sense. So generally debt is added into the portfolio to actually negate the downturn, which is generally recorded by equity funds, and balance out the portfolio returns. So that is clearly visible that these two funds have a negative correlation. So that means when Parag Parikh is going down, HDFC in fact is going up. So that's how the portfolio return gets balanced. So that's how correlation analysis will help you in understanding if the portfolio is diversified or not. So that's the correlation analysis for you. This typically brings us towards an end of the topic related webinar discussion. Let us now throw the forum open for a Q&A session. You can directly ask your questions by unmuting yourself, or you can actually type it in the chat box. Thank you.
There's a question on the chat about frequency of updates. If you're talking about the updates of data, then mutual fund NAVs are updated every single day, usually towards the evening or the night. Holding data for mutual funds is updated basically at the beginning of the month for the previous month, as and when the AMCs release their data. Typically by the 15th, all the holdings are up to date. Other than that, index prices are updated every day, and so are stock prices. So we have about just over 150 indices available. We have some indices. Yeah, just look at the well, we have some reference indices, but Prajakta, can you just show the TRI tab? So we have all the CISL indices here available, which are TRI. And you know, then we have various different combination of these indices available as well. If you want to actually look at other indices that are available publicly, we can add them. Also please note that the category averages are available. Project if you can go to the NGEN tab. These are obviously category averages of kind of debt funds. And you also asked in the chat if we can add CRISIL. That is not something we are currently able to do, as they are not, CRISIL as a company will not share their data with us. We have been trying, and we'll continue to try to get that data available to us for redistribution. But as of now, CRISIL indices are not available. Sure. So the contribution section basically shows you where the returns came from in this particular backtest. So when we run this backtest, we'll take all the funds in your portfolio. In this case, you've got a set of funds, and you can then see how each particular fund contributed to the performance. So here we show them in two ways. One is that we actually just show what the total return of that particular fund, not as part of the portfolio, but itself was. So in this case, the SBI equity hybrid fund over the time period you're looking at. And then the contribution to return is not in terms of return, it is as part of 100%. So basically almost half of the return in this portfolio came from that one fund. That's how this number should be read. It is not that SBI has actually contributed 46%. This means that 46% of the total portfolio return came from SBI. So, so this is how this particular column should be read. And you can actually see, the total portfolio return below. You can see the allocation of this fund. You can see it's quite high, and in the allocation in the portfolio is quite high, 60%, I think. Yeah. So that makes sense that the contribution from this fund would be a large number. So basically, whenever you look at it, you can basically look at the contribution of each portfolio component to the backtest return. There's another question about turnover ratios. So this is not something we currently have on our platform. We are speaking to our data providers about this. Turnover ratios as reported by the AMCs is currently not available, but we plan to get it in pretty soon. Okay, so the correlation here, basically, what this shows is it shows the relationship between any two funds in your portfolio. So Prajakta, just go onto a cell and then let's stay there. So for example, this number is 0.1. What this shows you is that the correlation between HSBC Dynamic Bond Fund and HDFC Top 100 Fund, both of which are in your portfolio, the correlation between them is 0.1. That's quite a low number. Correlation will always be a number between -1 and +1. So this is quite in the middle, almost towards 0. And this number basically shows you the relationship between these two things, HDFC Top 100 and HSBC Dynamic Bond Fund. And if the correlation is closer to +1, as you can see with some of the others where are 0.9, etc., it means that the relationship between these two items is very strong. And by relationship, it means how they move together. So for example, something that has a correlation of 0.95, which is in this case SBI equity hybrid and HDFC Top 100, that means that their up and down movements are very similar to each other. It does not mean that the return will be the same. It means that the directional movement of each of these is very, very similar. In which case, it also implies that the diversification benefit that you will get by adding these two funds into the same portfolio will not be very good. So you should typically not have too many funds in your portfolio who have high correlation to each other. It reduces your diversification. So as a simple example, if you have one equity fund and one debt fund in your portfolio, the diversification will be pretty good because the equity fund and the debt fund move in very, very different ways. If you have 5 or 6 large cap funds in your portfolio, they'll all be moving obviously in the same way, and they'll all have very high correlations to each other. So in this case, the correlation basically shows you what kind of diversification you have in your portfolio. And when you see these dark green numbers, which are quite high, almost very, very close to 1.95, 0.96, then you can look at that as an opportunity to take one of these two funds away and replacing it with something else. In this case, for example, Mirae Asset Emerging Blue Chip Fund and HDFC Top 100 Fund have very high correlation. So maybe you take the one that is performing better and take the other one away because in terms of diversification, it's not adding much. So hopefully that explains it a bit. Another question is on the debt side, the fund benchmarks are not available. So we have, as I said, the CISIL benchmarks. Other than that, so you've got CISIL bond index, CISIL T-bill index, etc. Other than that, we are trying to get some of the nifty debt indices as well. I think, sorry, the NSE debt indices, I think there are some available. So they should be adding soon as well. I don't think there is anything here. Okay, there some have already started adding. So you can check in this NSE column. There are some GSEC indices here as well. So some of the debt indices actually we have started adding them now, which are available in the NSE website. So for example, there you go, the 10-year benchmark GSEC is also available, and we will try to add more. Yes, the question is it possible to add a standard gold benchmark by the NGEN team? Yes, of course. We were actually hoping to add, silver and gold and some of the major commodities. This has been pending for a while, but I think we should be able to solve it soon. We'll either add them as custom securities on all logins, leave that there by default. Or we might just introduce an index will basically stand for the gold price. But this is definitely under progress and Prajakta. Let's write this down as well.
Yes.
And just so you know, right now, while we are working on getting this in, you can, in the compare section, you can probably find a gold fund or ETF, which will be very, very close to the gold price. So if you're really wanting to check the correlation of some funds with, let's say, a gold index, you could try, so you take that ETF and then you add another fund, and you can then try to look at, the correlation between the gold ETF and the fund, if that is what you're trying to do. So you can actually search on the fund list for any gold ETF. Prajakta, let's try on the stock list also. I think they may have been added as stocks. Just type gold there and see if there's something. No, doesn't look like. Well, there is the Kotak Gold ETF. The stock version is also there. There's a HDFC Gold. You can take any of these. They should be reasonably close to the gold price, you can use them as a proxy for gold as well. Yeah, you can see the returns are quite similar to the two that Prajakta just added. I think one of them is the Kotak Gold ETF. The other one, the stock that you added, I believe that's a price restatement. So just ignore that. You can take that away. But the mutual fund, the Kotak Gold ETF, I think that's fine. That should be all right. there any other questions, please let us know just on the chat, or if you can just unmute and ask. So the inflation rate is available on the market screen. So here you can see the history of the inflation rate here. You can compare it in terms of what other countries' inflation rates are, etc. So they are available here for you. So the question saying, can we convert inflation data or any other data into a graphical representation? I mean, do you want to see them as a chart? I mean, if that's what you need, that's already available. As we saw in the economic section, you can get the data there. I believe you can download it as well, I think. Yeah, you can get it in Excel, plus you can get this chart view as well. So, those are available. If you want to see the inflation rate as a line chart, I mean, ideally, the one quick way is to download the inflation rate history data from here. You'll get it in Excel. You can either do it in Excel, or if you want us to do a chart, you can add them as a custom security, as Prajakta was just showing you. And obviously, that will give you a line chart. So the update frequency, someone's asking about the update frequency of the economic data. So yeah, these are obviously very slow moving numbers. GDP, for example, it says 2021, I believe it's December 2021. The December 2022 update isn't here yet. If you can look it up online as well. So it's currently, as far as we've seen, it's not available. They may have, you can see this 2021. So whenever the government releases the data, it comes through our data provider, and this will automatically update. We do check this on a daily basis. Any other questions? Please just let us know in the chat. I believe people have trouble unmuting. I don't know why that's happening, but we will try and fix it for next time. But you can just type your question, please. Somebody's asking about commercials. No, nothing has changed, and everything is per normal. Okay, if there are no more questions, sorry, I think there's one. If possible, show a quick debt correlation matrix. Prajakta, if you go to the compare section, see if you have a debt list. Let's just have a look at that. So there you go. You can add any types of funds here and check the correlation. Prajakta, if you can just add a gilt fund and a dynamic bond fund, then we can have it. While this is happening, there's a question about asking for more information about technical indicators and using the charting section. We've actually did a webinar for this a week or two ago. That should be online on our YouTube channel. So once this is done, Prajakta will show you. So there you go. We've added correlation matrices. Yeah, we've added the funds, and you can see the correlation matrix. And yeah, so that YouTube channel, I think it's one of the very cut recent webinars, I think, which focuses on technical indicators. So if you go here, that's the one. No, I think there was one on the charting section, right? We can get back to you on this, but I'm pretty sure we did one session recently. Okay, any other questions? Please let us know. Okay, if there's nothing else, Prajakta, we can close for today. Thanks. Yeah, Prajakta, we can close for today. I don't think there are any more questions.
Yes. So thank you everyone for joining in. You can definitely see the recordings of the webinar sessions conducted in past on our YouTube channel. We upload the webinar recordings pretty frequently. So for this webinar as well, the recordings will be available by Thursday next week. So do stay tuned and have a great weekend ahead. Thank you.